Okay, recording this video after close of trade Wednesday, 6th of November 2013. It's actually the next morning here, Thursday morning in Europe. Hope you had a good day's trading Wednesday. And interesting things kind of going on. Let me show you my charts. We kind of busted out of that little range I was talking about, 1750 to 1760. But 1770, which was the high for today, ended up being a real kind of resistance. We're definitely overbought at this stage, and we're kind of in bubble territory. Thursday, the big news is going to be the Twitter IPOs, so psychologically I think that's going to have a big impact on the market. But just watch out, just a word of caution. This is kind of Wednesday's activity, a bit of a doji pattern here. You can see where the open and close is pretty similar. And we've had a couple over the last few days just to show that there's a little bit of uncertainty up here, and we're definitely kind of overextended. 1.1 million contracts traded, and just to show that kind of level of kind of overbought, I'm just going to show you a couple of charts that you can use to value the market effectively. One is comparing the S&P versus the yen, so the yen being a carry trade currency. When the yen is going down and the market's kind of going up, you can reach a phase where the market gets a little bit overbought, and if the yen starts to strengthen at any time, that'll cause a little bit of profit taking as people kind of need to reverse their positions because the carry trade's kind of starting to go against them. Anyway, so I'll link to the couple of articles I've written on this before. It's multi-market kind of analysis on TradeStation using the SPY, which is the ETF for the S&P, versus FXY, which is the ETF for the yen. And so we can generate kind of overbought and oversold levels. So here's overbought, here's oversold, overbought, and so on. You can go through periods where we're overbought for a long period of time as the yen was kind of breaking into this kind of severe downtrend. But now we're kind of leveling out a little bit in terms of what the yen is doing, and you can see just over the last few days we've reached this kind of overbought level. So any strengthening of the yen could cause people some trouble, and they may need to kind of take profits in the equities market. So just be aware of that's kind of been an overbought level for a while now. Same thing with bonds, so you can look at bonds versus equities as two kind of investables, and kind of the money travels between the two. And we're definitely kind of in a downtrend on bonds at the moment, but we've gone pretty far. So again, oversold, overbought, oversold, overbought, overbought, and the last couple of days here kind of getting overbought on equities versus bonds. As I said, we're in bubble territory, so this is kind of the strength in the equities market. Just could continue just on up, and if Twitter kind of goes off and doubles on day one, all that kind of stuff, people kind of rush in afterwards and all that kind of good stuff. So I'm just being very cautious about saying that there's weakness in the market. I don't see weakness in the market. We're just overbought, and we could come off a little bit. And then if you look at the long-term charts, this is what I'm seeing. So going up from the 4,500 tip bar chart, this was the little channel that we were stuck in, 50 to 60, over the last few days here. You can see that kind of activity there. And then overnight they gapped it up above the top of that channel. So they used the lack of liquidity in the overnight markets to kind of do that. And then we set off and had an exhaustion signal up to 1770, I think was the high yesterday, and that's where the exhaustion patterns kind of came in, the blue professional bars, pro signal exit, all that good stuff, cyclical resistance, bang, couldn't get past it, and this was a big decline. This happened really quickly. I was in and out, had a one shot, one kill, 4 points straight up, and got out. And mentally I was kind of done for the day, but then when I was checking my charts and seeing the speed of this kind of sell-off, that was pretty dramatic, over 10 points over the course of not too much time, and I'll show you what that looked like on the exhaustion patterns. But anyway, when we came back up into that level at the end of the day, into 67s and so on, again more blue professional bars kind of coming in. When you go up next time frame, so 13,500 time frame, we have had pullback 20%. That was the that pattern exhaustion selling, the level of selling that went into that 10-point move was huge. We've come back up and again kind of signaled another a little bit of exhaustion kind of there, but that was a lot of selling going on here. We've had pullback to end of trend, blue professional bar kind of coming in here. So 1770 is a critical level. We couldn't get through it there. And then lastly on the 40,500 tip bar chart, is this a complex correction? That because we broke through this channel to 1770, got that exhaustion pattern, and then immediately went the other way, suggests to me that we're going to test the bottom of the channel again and potentially kind of break through there. That freaked out a lot of people as we kind of broke up through that channel, and they could be wrong-footed at the moment, and if we go through the other side of the channel, that would be an interesting kind of move. So just a little bit of caution. It's not an exhaustion pattern. I'd love to see an exhaustion pattern on a left shoulder or something like that on this 40,500 tip bar chart, but so far the reading is not quite there. These previous readings have been up in the the 60s, 70s, 80s type thing, and this was only kind of 48 through this move. So let's see how this turns out, but that rejection at 1770 was kind of critical. Anyway, so how to get on board it. So 1500 tip bar chart. So this was the overnight business that they kind of just gapped it up through the top of that channel, used the lack of liquidity during the overnight session. That's the close, that's the open on Wednesday. So they've got everybody kind of a little bit nervous about what's kind of gone on. And so because we've not had an exhaustion pattern to end this move, that's what I'm looking for before we get a reversal. We've got to see that exhaustion pattern on the 1500 tip bar chart. So let's get long as soon as we can. And when you go down into the 1500 tip bar chart here, you can see the support levels are holding here. This is a little blue professional down bar, blue professional down bar. We momentarily break the lows of that, but as soon as we're breaking back up through those blue professional bars, through the highs of those blue professional bars, that's signaling that on those little dips the professionals were kind of getting in. You can see it on the 500 tip bar chart here. So we had a little Rambo to Rambo channel. And there's the blue professional bar, the perfect little entry there. As soon as we break up to there, we're breaking into an uptrend above this little kind of consolidation zone. Bang, pull back to end of trend. Then we get the exhaustion patterns, all the blue professional bars kind of coming in at the highs. I'll show you that on the 1500 as well. All the blue professional bars, pro signal exit, exhaustion buying, blue professional bars. It's all kind of good stuff up at 1770. And then it was a triple. So resistance on 1500, it's a pullback to end of trend on 500, and on the 4500 it's cyclical resistance. So I like those little patterns where we have the 500 tip bar charts a trend move syncing up with a cycle move on the higher time frame, the 4500. So that was a triple. We had resistance in all three time frames. It was an exhaustion pattern, blue professional bars kind of coming at those highs, and then bang, we had that real kind of sharp decline, 10 points down back to 1760. So I was done. And mentally I find it difficult to kind of get onto a move that just reverses so quickly. Unfortunately on 1500 it would have been great if there were a bearish divergence signal, but didn't kind of play out that well. We just fell off there so quickly. It's almost like we didn't come back up to test. It just started into that decline really quickly. So the bearish divergence signal kind of came in a lot later in the day after we've had our pullback level, and really this kind of any decline here, this Rambo pattern, all these amateur up bars, didn't go anywhere. It was almost like the market, they were kind of gaming it up to keep it at these levels in order to get out. I don't know. And then overnight we got a little bit of weakness, so we're coming back to the bottom of this kind of channel at 17. Well, we're back to 1760, 1750 is the bottom of the channel. Anyway, all I'm saying is just a little bit of caution kind of today. So anyway, looking forward to Thursday. Let's see what happens with Twitter and so on. But psychologically, I think it's going to be an interesting day for the market. Hope your trading's going well. Just going long 65.25, long 65.25. Show my stops and targets. It is 8:47 a.m. We've not got any news items today, but overnight we kind of rushed away up above the 60s. So they used the overnight session to get this thing broken up. We couldn't get really there. 62 is about the highest we could get yesterday. So we've got to see a blow-off move before this is over, and we've settled back into a little support here, 1500. Got one due on the 45, and we've just been in this Rambo to Rambo channel here. but little blue professional down bars kind of coming in. They're kind of holding. This last one's held. We've got resistance here. Break above that takes us into a trend move, hopefully on 500, and then we'll get this thing going to the upside. Here we go, 5.5. So that's what I'm looking for. Break. Oh, what's the high? 7.5. So just writing these things down. We'll get through that. We'll get some kind of exhaustion pattern afterwards. Here we go. There we go. Lovely. Lovely. Okay, let's hold on for the ride. Blimey. Well, there you go. Sticking with my target at 9.25. Unbelievable. Blue professional bars come in. 10,000 better momentum. 7.5 was that previous high. We just took it out and just went for it. So, come on. Don't just... Well, it's not going to stop there. It's got to put in pullback to end of trend. We've got cyclical resistance in at some point. So, that was potentially a bit of a pro-signal exit, but just need another, just a little move up. So we're almost up to 70. Bingo! Taken out 9.25. 4. Unbelievable. 8:52 AM. Well, bring back the good old days. That was excellent. 13,000 better momentum. It's going to be a pro-signal. It's going to be an exhaustion pattern. Pro-signal exit up here. Still got to go. Pull back to end of trend on 500. Let's see what this thing goes. There we go. Exhaustion, pro-signal exit, kind of up here. I just think people hate this rally. They just hate it. So overnight they moved it up to a new stretch, and there we go. We're almost up to 1770s. Here we go. Blue professional bars kind of coming in here. So done for the day. Alright, there we go. About 10 minutes later. Pullback to end of trend goes off, 500 tip bar chart. Couldn't get through 70s, for now at least. We've got cyclical resistance on the 45, so that's a trend move, syncing up with a cycle move here. It's also cycle resistance on 1500, so it's a pretty important level kind of up here. And just glad to be out. 69.25 was a very good price to get, so happy with that.